is David Eiswert. He's portfolio manager of the Rowe Price Global Technology Fund. His fund, by the way, has gained 74% so far this year, outperforming not only the S&P Tech Index, but most of its peers. David, welcome to Street Smart. Where do we start? Let's start with what Brendan was talking about. A lot of technology companies, some small caps in particular, have a lot of cash on hand. Are you anticipating, though, overall for the technology space that we're going to see more consolidation, a lot more deal flow?
That's a really interesting point, because when I actually did an analysis of my portfolio, and when I look at the companies that I own, they have about $300 billion in net cash, right? If you summed it up. So I think there are two things you're going to see. Clearly, you're going to see strategic acquisitions. There's a lot of change going on in tech today, and people want to position themselves. Areas like desktop virtualization or 3G, 4G wireless networks. The other thing I think you're going to see, Carol, is you're going to see a lot of stock buybacks. So I think as we move into next year, a lot of these companies, they're earning 40 basis points return on their cash, and so they have to look at their own shares as an alternative to buybacks. But I think that acquisitions, clearly next year is going to be a big time for acquisitions in tech. Anybody
in particular that you're looking at right now? I mean, obviously the HP thing was a big thing for us this year, but anybody in particular that you're watching?
In terms of companies that we think can be acquired?
Yes.
Yeah. Well, in mobile computing and smartphones, we think that Palm has built an asset that is very interesting, and that larger players whose technology is more legacy have to take a look at that asset when we see what Apple has done to the space. So how do you fight Apple if you're a legacy player in smartphones? That's one area. We think in semiconductors, there's a number of players that could be potentially acquired. Networking, there's some small players, F5, Riverbed, companies like that. The problem is that a lot of the premier assets have very high valuations. So you may see companies try to do more along the lines of what HP did and kind of buy 3Com, which is a relatively cheap asset, not the best asset in networking, but they felt like they got their money's worth when they bought it. So companies are in tech, I would say, are very sensitive about valuation and overpaying now.
David, let me ask you about some of the names that you've got in your top 10 holdings. I think this was as of the end of September. Apple, Qualcomm, IBM, Microsoft, Google. I mean, these are really certainly well-known names. Are you adding to any of these positions? Are you paring back on any of these positions?
Well, fundamentally, when we look at next year, especially the first half of next year, we think the market is underestimating earnings power. And so what's happening is, we're seeing a lot of the signs of a normal tech recovery, a normal economic recovery. But what's happened in tech is, since the tech bubble in 2000, you've seen dramatic efficiency improvements, dramatic improvements in management, and that's created the opportunity for a lot of operating leverage. So everyone's focused on the March lows or the end of the year lows, which is really kind of an apocalyptic time, and they're looking at these stocks and they think they're up too much. But when we look at the earnings power of some of these companies next year, we're very optimistic. Again, especially in the first half, when we think we're going to see a lot of earnings revisions throughout tech. I think semiconductors is a really important place to look. Intel got an upgrade today, and I think what you're going to see more of in semiconductors is kind of a realization that the earnings numbers that the street has out for next year are really too low. So Intel, ON Semiconductor, Micron, SanDisk, these are all really interesting names where we think the street just has the earnings too low going into next year. They're too anchored.
Well, are these names that you're buying or have been as of late?
Names that we've been adding to recently, ON Semiconductor is one we've been adding to, Qualcomm. We've been adding, I'll tell you, we've been adding a lot to Japanese names. It's a global tech fund, so we have over 30% of the fund outside the U.S. Japan, a very interesting market right now. You've got a domestic economy that's very weak, and yet there are a lot of very interesting Japanese exporters. So companies like Canon and Toshiba, Nidec, who makes micromotors for hard disk drives. These are names, NGK Insulator, another one. We think that Japan tech, the Japan component exporters offer a lot of value.
All right, I want to get to also, I think, what you've got as top 3 picks for 2010 outside of your top 10 holdings. And Juniper Networks is one of those. Why specifically Juniper?
Great. That's it's a really interesting company, so it's worthwhile to talk about. Juniper makes networking equipment for telecom networks, and now they've moved into the enterprise. And the thing about Juniper that's interesting is that they make their own semiconductors, they design their own semiconductors, and they have their own operating system. So they have unique technology value. They also, in the enterprise, have less than 5% share of enterprise networking and security. And we think that that market's ripe for someone to come in and be a number 2 to Cisco. So we look at Juniper, and again, it's a stock that when we look at the street earnings numbers for next year, we just think that they're underestimating the leverage.
All right. Also, JDS Uniphase is another one that you like here.
Great company. That was a darling back in the tech bubble.
Right.
Had a huge market cap. And people look at JDSU and they think about it as an optical component company. But JDSU, only, I'd say less than 30% of their sales now come from optical components. It's much more about test and measurement, about industrial lasers, about some even currency pigments is an area that JDSU is in. We think that company is undercovered and just undervalued. So, JDSU should see significant upgrades into next year. And really, it's an under-owned stock, so we think a lot of people are going to be looking to add it.
David, just got about 20 seconds. You mentioned some of the semi names earlier, Intel in particular, ASML and Lam Research, though other semi names. You like these as well?
Right. And here's the deal. We've underinvested in semiconductor manufacturing. And what we're seeing that manifest itself through memory prices today. Very, very positive, stable memory prices for semiconductor memory. But what you've seen is that as we see growth come back next year, we need to invest in new semiconductor manufacturing capacity. So ASML, the leader of a unique part, a specialized part of semiconductor manufacturing, they have to have their machines. So that's a good place. All
right, we got to run. Hey, David, have a great holiday. Thank you.
You too. Thanks, Carol.
David Eiswert over at T. Rowe Price Global Technology Fund.